Banks are all anyone talks about these days. So rather than fight the trend, we're giving you a trio of quality regional bank stocks that we rate at 10 out of 10. We use data from Trackstar, our proprietary sentiment indicator, to find Financial Pro's top regional bank stock searches over the last month. And from that list, we came up with 3 names with a lot of value that appear much safer than the rest. And they are Truist Financial, M&T Bank, and Huntington Bank shares. So why did we choose them? Well, SVB Financial failed for 3 main reasons, so we looked for banks that avoided these risks. It's quite simple. First, we searched for banks with a larger percentage of deposits below the 250,000 FDIC insured threshold. SVB had just 2.7% of these deposits because most of its depositors were tech startups. M&T, Truist, and Huntington do way better on this measure. We then looked at the percentage of assets each bank holds in securities. SVB had 55.4% of its assets in securities, and all 3 of our banks have a far lower ratio. M&T, Truist, and Huntington are more conservative, putting much more of their depositors' money to work in loans. And without getting into the nitty-gritty, all 3 do a good job of hedging to mitigate the effects of price movements. Huntington and M&T grew year over year, and forecasts say they'll do better next year as well. Truist didn't grow year over year, but over the last 5 years it's had a better average growth. All 3 banks are cheap on a price-to-earnings basis. Truist and M&T trade below book value, which could be a better deal for investors, while Truist has the best price-to-cash flow ratio. We expect M&T, Truist, and Huntington to survive and thrive. Each offers a slightly different way to play the sell-off in banks. They have all forward dividend yields over 4%, and in Truist's case, 6%. Just let the dust settle for a few weeks before hopping on into these names.